everybody. This is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com, and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. All right, guys, happy Saturday. I just felt like I wanted to, I was just thinking about something fun. Figured I'd share it. So the idea that I was thinking about this morning and last night was, this is Bitcoin, and there has been some talk, how high will Bitcoin get in 2023 and how high will it get in 2024 and some of those types of ideas. Well, so far, because of the halving event, Bitcoin is generally following a 4-year cycle. And what we're looking at on this chart here is the 1-year chart. So every candle represents the open, the high, the low, and the close of every year. So you'll kind of notice, so back here in 2010, data was a little bit sparse. We had a yearly close of 30 cents. And then we started, and our data probably got a little bit cleaner and a little bit better. This is the US dollar index for Bitcoin. It even has a candle for 2009, which opens and closes at 0 since it traded for less than a penny back then. But once you get up to a couple dollars, and Bitcoin kind of had its first significant move back in 2013, we saw the emergence of this bull market, bear market, sort of a flat, undecided year, kind of a ramp up phase, and then another bull market. And this sort of pattern has repeated. So you'll notice that every 4 years there's a red candle on the yearly because there's this pullback, this kind of bearish situation that happens. Well, if there is a 4-year cycle, there might be something that we can learn from a 4-year average. So what I've done is I've put this little line here. It's a blue line. I probably could make it fatter, huh? Let me see, settings. Style. We'll make it fat. Okay. So this is our 4-year average based on the candle body close of each year. So what's interesting is that we can kind of see at the 4-year average of our first year, you can kind of see how we have a move that's slightly higher. The average here is $189, and our candle high was $12.42. So there's kind of a ratio between the high and the 4-year average. I'm kind of skipping over the bear markets because the high of the bear market isn't too interesting to us. It might be more interesting to look at maybe the low or something versus the 4-year average. This whole candle stayed above the 4-year average. This one dipped into it, and this one's about halfway through. So you can see kind of a little bit of momentum change happening. But there are also some very unusual things. So for example, this candle was way larger, and the 4-year was kind of in the middle. This was a smaller candle, and I'm on a log scale, so a smaller candle doesn't mean that it was smaller dollar-wise, but as a percentage increase, it was smaller. And so here, we're still pretty close to the middle, but our kind of bull year here, the entire candle body was above the 4. So there is a shift happening, and it's probably because the years don't line up perfectly with the halving. The halving sort of happened around December back in here. I think it was November when that happened. And then we really launched the halving. And then it's kind of shifted to closer to the middle of the year, and now it's becoming the beginning of the year. So April's will be sooner. So these are changing a little bit, but there's still something that we might be able to discover from this. So all I'm going to do is I'm going to take all of these high-low close yearly candles, and then I'm going to take the 4-year average, and I'm just going to plot it on an Excel spreadsheet. So here's the results of my spreadsheet. So really, 2009 through 11, not much happened. It was, there was no 4-year average because we didn't have enough data to even see one. And then this final year, 2012, it was kind of the first year we had information, and because our open, high, low, close was 0, these ratios may or may not be super applicable. So anyway, I started the phase, so I'm categorizing the phase as bull, bear, the flat year, or the year of the chop, like I like to say, the build phase, and then the next bull market year. And then these repeat. Well, if you take the high divided by the average, so this is our 4-year average, and this is our high, that multiple is 6.56 in this bull market. So this bull market was the highest multiple. This bull market, it was 5.07, so it was similar, but much lower. So our 4-year average was around 3,900, and our high for the year was 19,800. Well, next bull market, our average is getting big. 21,000 is the average of the last 4 years, and the high was 68,000, so our multiple dropped all the way down to 3.21. So our multiple is getting lower, which means we're not really outpacing our 4-year average as high as we used to. But it is kind of interesting if you take a look at the flat year, because the flat year is the year that we're interested in. So this year, and this year, and this year, these are the years that we're sort of interested in. So let's take a look and see what we can learn. So if we wanted to estimate the high of 2023, one method we could take is we could say, okay, what was the 4-year average, and what was the highest point that we reached during that year versus the average. In 2015, that high versus the 4-year average was a multiple of 1.34. Interestingly, in 2019, during this flat year, our average was 6,000, but we had a yearly high of almost double. So our average, our multiple was about 2.16. So if we take these two numbers, we can kind of pull out what would our high be if we used our average. So our 4-year average right now is about 30,276. And if we multiply this by the lowest number, that would give us a potential high for this year. And if we multiplied it by the highest number, it would give us a high number, which would give us a range. So I've already done the math so that we don't have to go through anything too fancy. But you can see here that if we took 30,000 and multiplied it by our 1.34, it would give us a 2023 high of 40,580. And this is our low estimate. So we're currently trading at below 30,000. That means there is potentially another $10,000 on the table, which would be pretty sweet. This is the low of the range. I wouldn't necessarily call it a worst case scenario, but it should be a low case scenario. Now the high is that we use this 2.16. So if I take the 30,000 by 2.16, potentially we could reach a high of 65,000 based on this model, which would be pretty fun. That would be more than double where we are at 30,000. And if you take the average of our 2 data points, because we only have 2, that would be 52,000, which would be a pretty sizable increase from where we are currently. Okay, so then the other way to do this, and the other thing that we might want to consider is where will we close at the end of the year? Because sometimes you'll get that high in the middle of the year and then it'll pull back at some point. So here we are, mid-August. We still have 3.5 months to go, and well, actually, I guess 4.5 months to go. And so at some point during the 4.5 months, we may have some kind of a bullish, pretty strong impulse, and then we may pull back a bit. So historically, where did we go? So on the flat year, our annual close in the flat year ended up being a multiple of 1.14, and amazingly, the multiple on our close for this was only 1.11. So these data points are actually much closer together, and so the information here may be a little more accurate. So if I take the close, which is built by our 4-year average divided by our close divided by our 4-year average, it gives us 1.14, and then the close of 2019, which was at 7,167, divided by that 4-year average of 64, is 1.1. So now let's take a look here. If we take our low estimate would have been this 1.11, and we multiply our 30,000 by the 1.11, it gives us 33,749, and the high case was only 34,500. So that means it could potentially pull back a fair amount. So it is interesting that these numbers are so close with an average of 34. Potentially, if we got moving up pretty high, historically we've actually seen a pullback before the halving. So at some point we usually start ramping up, gaining strength. We may hit some nice highs, but we may pull back a little bit and come in to close the year, and then as the actual halving comes, then we can kind of move on. So I'm not sure. This is just kind of a speculative video to just kind of look at some of these numbers, playing with some of the math here. But this flat year, generally, it does pretty well. There are times when we can get pretty high, and I expect that we will. So with that information, we can kind of take a quick look at where we are and where we're headed. I'll just give you a quick synopsis of where my thoughts are. We made a big deal a couple of days ago about Bitcoin crossing the 20-day moving average. I guess I can hide this now. All right, so we finally got above our 20. Well, look what we've been doing for the last 3 days. We've come back and found perfect support on our 20. For 3 days, our candle bodies are getting smaller and smaller and smaller, and we're about to have green days and moving up. If we start moving up, and this is our confirmation of our swing low, then we will have a higher high and a higher low in the books, which is the definition of a momentum shift. And that means over the next few days, we will start seeing some green, and in the next few weeks, we will likely start pushing up. The next attempt will be hitting our 50, which is now kindly retreating down towards us. So if the 50 is sloping down, it makes it easier to reach, and that 50 is at about 30,000. Here's something else also to think about. So if I go to the 4-hour chart, this chart looks pretty nice. I'll tell you why. So we exited the red zone. Exiting the red zone on the 4-hour chart is a big deal. The last time we really exited the red zone, our 50 was at a price of 25,867, and our buying opportunity for that confirmation would have been 26,400. That would have been a pretty good entry point. So if we exit this red zone, we are likely to get moving. And we had a little bit of a fake out here, but this looks like a sustained exit of the red zone on the 4 hours. So that means we've got an impulse coming. And so on this 4 hour, the pattern we like to see is we like to see a nice move off, and then we usually have some kind of pullback, which brings us down to the 50. Well, Look at the only candle that has touched the 50 period moving average on the 4 hour. It is this candle right here. And for those of you who've watched and who've been trading for a while, you'll know exactly what this is. This is a beautiful shooting star or dragonfly doji. This is a reversal candle that pushes price up and will move us towards the upside. That's what this candle normally will do. So this is a greater than 50% chance that this is our bottom candle on the 4 hour. And if that's a bottom on the 4 hour, that means our bottom at 29,245 is most likely in. And it's funny that we kind of pulled back and we want to touch the 50, but we don't want to sit on it. And so we've only touched it during one of the 4 hour periods, and it was a full reversal candle. Absolutely beautiful. So now we're pulling up slowly. We're definitely on the quiet part of the week. So the market's pretty flat, not a lot of energy in this market, but you can see how we are rounding up. See how we're making a little bit of a smile here? And we're doing it right after we've hit this. So the next target will be, if we're a lazy market, we'll come up to the 200 and then retouch the 50 again for support and then break up. Or if we just get moving, we can easily start breaking this 200. So we don't have to do anything. Usually we'll come hit the 50 and then we'll continue moving up. Well, with our 200 coming down and that being our new target, that number is around 29,700. So if we get back up to 29,700, what does that do on the daily chart? Well, 29,700 puts us in the vicinity of this resistance area that we've sort of broken. So if we can get up to here with a higher low, we're definitely, this pot is boiling. We're about to really break. And if you go to the weekly, our number we're trying to hit is 30,600. That's our 2.5 year resistance. This is the big line that we've been watching for a long time. 29,700 gets us pretty much about halfway there. And I'm just waiting. So yeah, we'll see where this candle closes. If we have a day and 6 hours till our weekly close, if we can get this green candle to have a little bit larger body, kind of showing that we've bounced off this 20-week moving average and we're starting to move up, we could get into fireworks land in the next few weeks. So pretty exciting. So I'll just leave you with that little thing today. I hope you guys are having a good weekend, and I'm really excited. My kids are back in school on Wednesday. I'm thinking that my life will go back to normal, and I can give you guys a few more regular updates. So, all right. Hope you guys enjoy your weekend again, and we'll catch you on the next one. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.